Welcome back. I'm Pratap here. Today is 21st January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You know the cost of the training is over 8,000 US dollars. And we are providing complete free training. All training videos you can access at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. Here you have all the training lessons are available. You just need to go down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order so you can access one by one and you can strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Each time we release the new video or any other important update, we will be providing at our Telegram channel. Now let's get into the analysis discussion. But before that, one of the members sent this message. Prestige Estates blocked me loss. I am facing afraid to book stop loss. Please guide me. It's a very important question. Traders might be facing this kind of problem at the initial stage of your trading journey. You will be happy when you get the profits. But if any day your analysis fails and your stop loss hit, our mind says, no, wait for some more time. Wait for some more time. Maybe the prices might be turning up and moving up. Instead of getting loss, you may get profit. This is how your mind will be trying to control your emotions. Isn't it? Many of the traders, they might have faced this kind of situation in the early stage of your trading journey. The biggest problem in the early stage of the traders is fear of losing the money. But remember, sometimes you need to lose the money to get big profits. Sometimes you need to book the loss to get the opportunities. The other opportunities available in the market, I will show you in today. If you would have booked this profit loss, immediately after few minutes, you would have got opportunity in another stock, and that stock you would have got the profit, and that profit would have recovered your loss. That's why it is essential for everyone to control our emotions. In lesson 3, lesson 4, lesson 5 itself, you learn risk management, especially in lesson 5. I have explained the concepts of risk management. Why I introduced risk management early in our training course? Why I am telling everyone you must complete our training course before you start using our software results? This is the prerequisite I kept. I have seen many of the people learning supply demand zone price action course somewhere at outside. Directly they are buying our scan results and they are trying to make use of the concepts. But what is that I am suggesting everyone? Complete our training course. That's why I made this prerequisite. But I may not be knowing whether you really completed or not, right? I believe, okay, you completed the course before we accept your premium subscription. Even money also many times he is suggesting the people. He is asking whether did you complete the course. Then only he is trying to accept your subscription. Because I have given clear instructions to him. Your premium subscription is not important to us. Your course completion and practicing the concepts in good way Why I suggested you people do paper trading? Once you get confidence, then only you opt for our NeoStock software generated reports. How much time it will take? Maybe a 1 month extra time, or maybe 2 months extra time it will take. If you can't invest your time, this is the kind of psychological problems we will be facing. Trading psychology is very, very important. The fear should go away from your mind. With fear, we never be a successful trader. Mark these words. Stock market itself is based on the risk management. Sometimes your risk will hit. Sometimes you get the profits. We already build a system that gives you better success rate compared to the failures. When you have such system with you, sometimes 1 or 2 times instances, or maybe 3 or 4 instances in a month, if your trades are stopped out, you have to accept. If you don't accept, you will be missing the opportunities. Immediately you may get. That is what I am going to give you. In general, what is the procedure? First we will discuss all the successful trades, and then we go to the failed trades in our HLQ zone analysis. Today I am going to do in the reverse direction. First we will discuss the stopped out trade. Then we will look into the successful trades. So that you understand, if you don't book the loss when the stop loss is hit, what is going to happen, you will understand practically. Always remember, market will be giving you some opportunities. If you have fear in your mind, you will be losing those opportunities. And the second important thing is, why we introduced risk management in our course? Because before taking the trade, you will be knowing how much money you might lose if your analysis goes wrong. What you learned about the risk? A possibility of getting the loss if our analysis goes wrong. How much money you will be losing in case if our analysis goes wrong. That itself our supply demand zone concept is telling you clearly. Suppose that much risk you can't accept, don't take trade. Who told you to take the trade if the risk is higher than your acceptance? What is higher than our acceptance? Say for example, let us say some people may accept risk up to 2% level. That is the maximum accepted risk. You can't take trades beyond that. Okay, beyond 2% you can't accept. That is the rule. Okay, some people accept up to 2%. Some people don't accept up to 2%. They want to accept only 1.5% maximum. Some people, they want to accept only 1% maximum. Some people, they want to accept only 0.8% maximum or 0.7% maximum. Until that much risk management, whatever you are accepting, accept the trade if prices are entering into that much risk level. Otherwise, don't take the trade. Look into the prestige. What is the statistics we got today? See, today we got 3 trades. Out of 3, we got 2 successful trades. One is stopped out. And how much risk it has given? 1.5% on your capital. If this risk you cannot accept, don't accept this trade. Simple. You are blindly taking the trade without looking into the risk, hoping that every trade you take will get success. It won't happen. Every trade you take also might fail. That possibility is also there. What is the probability game? We have 50% success, 50% fail. In general. Because success and failures are having equal chances in general. But we build a system in such a way, at least success rate will be improved up to 80% level. That kind of system we build. But still you have 20% chances are there for failure, right? Maybe the trade you took get into the 20% level. That is what happened today. You get into this level, your trade is stopped out. You have to accept. The moment it hit the stop loss, you have to exit out of the trade. Suppose you don't want to accept this much loss. Don't take this trade. You have that option. Another option is also there. What is that? Reduce the risk. How to reduce? Take the deep entry. Fine tune the entry. Yesterday, the training lesson 29.1.2. Yesterday, the last video I released about your training lessons. In that video, I clearly explained how you can fine tune the entry. Apply that concept. If you feel 1 point risk is high, because you are losing 1900 rupees, then how much you can accept? Maybe 1000 rupees loss you can accept, you don't mind. Then take a deep entry. You may say, when I take a deep entry, I may miss the trade. Okay, anyway, because you have to miss if the prices are not coming because you can't accept higher risk. You know you can't accept higher risk. Luckily, prices reaches to your deep entry. Your trade will be executed. If it is successful, you are happy. If it is failed, anyway you are losing small amount of money. It is okay for you. You don't mind. This is how you need to set your mind. First of all, whoever is taking trades, you have to accept. There are times my trades will be failed. At the time it is okay for me. Whatever the money I am going to lose. Before taking the trade itself, you know you are going to lose this much money. How do we know? You already learned in lesson 5. How to calculate the risk. How to calculate the target. Clearly explained in lesson 5. Please go through the lesson once again. Without trade plan, you cannot blindly take the trades. Before taking the trade, you need to calculate the risk, how much risk you are handling. Go to the chart. Here we have successful trades in KPI technologies. But before that, let me start with the stock that is stopped out today. I am starting Prestige. This is a 75 minutes high liquidity zone. It's a rally base rally. This is the 75 minute zone suggested by our software, high liquidity zone. What we did, we fine tuned with 15 minutes time frame. Here in the 15 minutes time frame, we have a zone drop, 3 base candles, a rally, and again prices came here. From here again it moved. While moving again, here a new 15 minute zone new fine tuned 5 minute zone is created. That we observe in the 5 minutes time frame. But within the area, there is no proper 5 minute zone. But here we have a fine tuned 5 minute zone. Let's go to the 5 minutes time frame. See here. We have a drop, 2 base candles and a rally candle with a pro gap. Earlier prices picked up the orders from this pro gap area near the fine tuned zone. See how sharply they moved. Again next time once again they came. How sharply they moved. Definitely this is a very good area to plan our trade. No doubt. But why it failed today, you may ask. Maybe the supply is much stronger than the demand. That happens in 20% scenarios. That is where we get failures in our HLQ zones. Today it happened to be this stock. See here today, sometime it struggled here. It was trying to hold, but supply is also very strong. See institutions strongly how they pushed the market. Our trade is stopped out. But before you take this trade, you will complete your trade plan, right? See here you have a 15 minutes target zone. You have some rally, 2 base candles, medium size leg candles also part of the base, drop, follow through candles. You have 15 minutes target here. So before you take this trade, you will mark this supply zone. And before you mark the supply zone itself, you might have calculated this risk. See here, the blue color line I have drawn is the stop buffer. You added the stop buffer. With the stop buffer and your entry you might have calculated. If you calculate, see here, from here to here. How do you calculate? This is your entry. What is your entry? 1438. Let me show you. What you have to do before taking the trade. This everything I explained in lesson 5. Same thing I am again explaining to you, because me believing that you are not listening our training lessons properly. See, this is our entry. Okay, this is supposed to be your stop loss, the digital line. But in lesson 18 or 19, one of these lessons, you learn stop buffers. After learning stop buffers, you add some more buffer. Everyday HLQ analysis video, I am generating stop buffer values based on daily ATR. So the daily ATR value, this blue color line, what I have drawn. So what is the value? This is the stop buffer. After adding the stop buffer, your stop loss should be at 1432 10 paisa. Okay, one share you are going to lose 5.9 rupees. Okay, if you are taking a future, what could be your future lot? Let's go to the zero the margin calculator. So this is zero the margin calculator. At least we are taking the help to calculate our risk and our profit or risk. So this is Prestige on the 30 January 2025 futures. So I selected. And what is the net quantity? 325. So in case if you get a loss, each stock 5 rupee 90 paisa loss you are getting, into 325 is the lot size. How much you are getting? 1917.5. That is what? 1917. This is your loss. Okay, how I am calculating the ROA? This is the ROA at the closing price of this chart. This is the closing price here. 1,23,000. Maybe at this time the price could have been a little higher, 1,24,000 rupees. Approximately, I am saying. So into 100 divided by 1,24,000. So you got 1.54. So that is what you are seeing here. Minus 1.5 is your ROA, negative ROA. Is it within your 2% stop loss? Yes. Those who accept 2% risk, they can handle this trade. Or those who can accept up to 1.5% also, they can handle this stock. That means they can accept this stop loss. Those who can't handle this much 1.5 risk, your risk is only 1%. You can't accept this much. So what you have to do? You have two options. Option 1, leave this stock. Look for some other stock. Option 2, you don't want to miss it because it is looking very promising. See the price action clues earlier, prices came near to the zone, they were moving. That means a strong institutional order flow is there. Today it is our bad luck, because today supply is much stronger than the demand. So finally it is violated. Okay, but in general these kind of stocks will give us a very good profits. We can't miss such kind of stocks. But risk is high. What you have to do? Very simple. Reduce the risk. How to reduce the risk? Take deep entry. How to take deep entry? I am just suggesting you, instead of taking a trade, I want to take a trade somewhere here. Now my entry is reduced. Maybe I am planning type 3 proximal entry. Type 3 proximal. Prices enter, then only I want to take the trade. But what is the risk? There are higher chances prices may reach just before this type 3 proximal and then started moving up. That way you will be missing the trade. But anyway, you can't accept higher risk. When you can't accept higher risk, you can't take the trade anyway. But luckily, if prices enter, you will take the trade. Is prices entered here today? Yes, in this candle. See, this candle just reached and then again moved a little up, and after that next candle it is violated. But you would have got the trade, right? Maybe if it would not have been violated today, just reached this zone again, started moving up and reached, you would be very happy, right? You would have got a very good profit. Suppose just before reaching again started moving up, you will be missing the trade. Anyway, you don't accept because the risk is very high. Now if you take like this, what could be the risk? Let us calculate when you are taking type 3 entry. What could be your entry here? 1436. Earlier it was 1438. Now 2 points risk is reduced. So 1436 minus, and what is your stop buffer value? 1432. That is your stop loss. Now see, your risk is reduced now because you are taking a deep entry, maybe a type 3 proximal, or maybe further a little even below also you can take. Until 1% risk management level or 1.2% risk management level, whatever minimum you accept, that much risk level. Okay, 3.9. And what is the net quantity? 325. So 3.9 into 325. You will be losing 1267.5 rupees if risk occurs. If luckily, if the trade is successful and if your trade is executed, you will be a lucky person on the day. Anyway, you can't take the trade because your risk is a little higher than your accepted limit. Suppose if this is your accepted limit, you will take the trade. If it is still not accepted, you don't want to take this much risk, again take a little more deep trade, deep entry. But don't go close to the distal line. At some level, the trade-off should be there. If beyond that, better leave that stock. Suppose with this risk, how much money you will be losing? I mean, ROA, negative ROA in case if it is stopped out. So into 100 divided by maybe 1,24,000 close to. See, you got 1% risk. 1.0. Okay, the fraction you leave it. So at least this 1% risk level you will accept. Some of your capital would have been saved if it is stopped out. If trade is executed, you would have got a little extra profit. If trade is not, if you miss the trade, suppose price did not came up to you might have missed the trade. Okay, fine. Anyway, you can't take the trade because the risk is beyond your accepted limit. Even if you miss, not a problem for you. Because earlier you would have avoided this trade because the risk is higher than your accepted. That way, at least that kind of satisfaction should be there. You should not feel I would have taken a trade, I would have accepted more risk. You should not feel like that. See, today when the trade is stopped out, you are suffering. What is that you are feeling? Okay, I got more loss than my accepted risk. First of all, why you should take a trade when the risk is bigger than what you can accept? 2% maximum risk that is the theory. There is no rule that every time you have to accept 2%. But some people they won't accept beyond 1%. Some people, otherwise they ignore the trades. Some people accept only 0.8% or 0.46%. It is up to the individuals. And your third option is also there. But it won't work properly in F&O unless you are a very high value investor. You buy some 20 lots or 30 lots of the futures. At that time you can apply this third concept. Otherwise you can't use in F&O. You can use in the cash market. What is that? Position sizing. You already learned position sizing. In lesson 18 or 19, one of those lessons you learned. Do position size. Your risk is only 0.6%. You take a trade here itself. Where initially what was our plan? Here itself. This is the type 1 proximal. Of course, type 1, type 2 proximals are equal here in this scenario, because the high of the candle and the second proximal entry both are same here. In this situation, still you take. You may say, we will be losing 1.5% money. No. Position sizing, what you learn? Reducing your position. Your capital is same, whatever the capital you are investing. But you will not be utilizing entire capital. You block your capital. Instead of buying 100 shares, you buy only 50 shares. Say for example, buying 100 shares, the risk is 1.5. Instead of buying 100, if you buy 50, what is the risk? It is only 0.075 points or 0.8%, close to round value. That's it. Instead of taking 1.5 risk, you are taking only half of the risk you are taking by doing position sizing. How? Instead of buying 100, you are buying only 50 shares. But still your capital is same. But you are not investing your entire capital. 50% of capital you are investing, and remaining 50% you are blocking the capital. So what is the advantage you get? Instead of getting this 2000, say let us say round value I am giving 2000 rupees loss, you will get only 1000 rupees loss. But what is the disadvantage with this approach? If instead of getting 5000 rupees profit, you will get 2500 rupees profit. Why? Because instead of buying 100 shares, you are buying only 50 shares. So profit will be reduced. But at the same time, if analysis goes wrong, your capital, the loss, the amount you lose from your capital is small amount compared to the earlier. Earlier you would have lost 2000 rupees. Now you are losing only 1000 rupees. If your analysis goes wrong. That's why risk management is very, very important. I focused a lot about the risk management in our course. Without accepting the risk, you cannot take the trade. Stock market is all about how you are managing your risk. If you are very good in managing the risk, always you get good profits in the long run. You should not worry about one or two stocks where your trades are getting stopped out. Let us assume every time whatever the take you are taking continuously, next 3-4 times, whatever the trades you took, you are an unlucky person. Let us assume your next 5 stocks are stopped out. Only your 6th stock got the profit. You have such kind of luck. Still you need not worry with our concept. That one trade that is giving you profit, that will recover all the losses, still it will add some more money into your capital. Because each time when you are getting losses, you are getting 1000 rupees, 1000 rupees, 1000 rupees, 1000 rupees, 4000, 4 times 4000 rupees loss you got. 5th time your trade is successful. You got 5000 rupees profit. All 4000 losses you recovered, still you got another 1000 rupees profit. But are we developed such kind of worse system? No. Out of 5 trades, rarely you see one stopped out trade in our system. Remaining 4 will be successful. Worst case scenario, out of 5, maybe you may see 2 trades are stopped out. Even worst case, 3 trades are stopped out. Still you get 2 trades, successful trades. The first trade would have recovered all your losses out of 5, the 3 whatever you lost. The 4th trade would have recovered all your losses. Still you would have given you small profit. 5th trade would have given you good profit. This is how you should set your mind. Every time you are thinking, okay, I am having fear of losing the money, I am getting losses. If you think like that, you never get profits in stock market. Stock market game is all about how you are managing your risk. That's it. Nothing more than that. To minimize that risk and improve our profits, you learn all these risk management concepts in our course. Why I am suggesting all the members should complete our course before taking the trades? Why I am suggesting all the members do some paper trading before you take the trades, or before you use our software subscriptions? Because you should understand how our system is working. You should understand our system is giving more profits than losses. Losses we get, but profits is much more. Today also you see, Prestige, what happened? Let me show you today. If you have fear in your mind how you are losing opportunities, you will understand. Okay, this is Prestige and it is stopped out. Let me go to 1 minute time frame so that you will understand my argument, my analysis properly. When you got the trade at morning 9 o'clock 47 minutes. Let me register the timestamp here. 9 o'clock 47 you got the entry. And when your trade, this is the entry time. Next, exit. When you exited from the trade, here in this candle, your trade is stopped out. Immediately how to exit? No excuse. Do you remember previously once I explained, I think few days back, maybe some 6 or 7 days back, HLQ analysis. You have seen the video, I think last Monday, not this Monday, the previous Monday, the last week's Monday. Because that was the time all our trades were stopped out. Do you remember that day, one trade just below the stop buffer value, it went and then it recovered, it gave a very good profit. Did I told you that day it is a profitable trade? No. Still I consider, see, very small before, just few paisa before, and then immediately it recovered. Still I consider that is a loss. Why? Because it hit our stop loss. We should be that much risk. You don't care what happens after you exit from the trade, whether let it go down further or let it move up, you don't really care. It hit the stop loss, we have to exit, that's it. Your mind should think like that. Why? Because before trading itself, you know how much loss you are going to get if your analysis goes wrong. The potential loss, you know that. Because we are calculating before the trade. After the calculation only we are accepting this trade. After the calculation only, if the risk is more, we are further reducing our entry. That means we are fine-tuning our entry. By reducing the risk, we are taking the trade. At what level we are taking? At our risk accepted level, we are taking our entry. If your risk acceptance capacity is only 1%, within this zone at 1% level, you mark a blue color line. There only when prices comes, you take the trade. Otherwise, don't take the trade. Why? Because if the risk occurs, that means if the trade is stopped out, you lose more money than what you are accepting the risk. That you should not do. You should be very strict on that part. Sometimes you may miss the trade when you take deep entries, but you have to accept that, because that is beyond our risk acceptance. Or you have to do position sizing. If you don't want to miss, you have to do position sizing. At the time, cash segment only you have to take the trades. First of all, greediness. That is also one killing factor for us. We should not be greedy. We should stick to the rules, software fundamental rules. We should stick to the risk management rules. That's it. See, today you would have got a trade at morning 9:47, and when your trade is stopped out in this candle at 10 o'clock 6 minutes. Exit time. You exited the trade by booking the whatever the stop loss you booked. Okay. Now, immediately after few minutes, maybe after 10 minutes, you got a trade opportunity in KPIT Technologies. This is also a 75-minute zone. This is a 75-minute zone. However, software identified as a rally 1, 2, 3, 4 base candles and a rally candle. And in the recent time, prices entered. Here a new order flows it created. Let's go to the 15 minutes time frame. See here, we have a drop, base, rally. And again here you don't have a 15 minutes zone here. But why still I have drawn this zone? There is an aggressive trade setup at 5 minutes time frame. Here drop, 2 base candles and rally. This is the aggressive. Why we are considering aggressive? See here, prices came very close and then moved up. Second time also it came very close, then we should not. Because I told you, when you are going for aggressive trade setups, if you are a beginner, at least you look for 2 price action clues. If you are an experienced person, 1 price action clue is different. And this rule recently I set. Why I set this rule recently? Because many people misused this concept. Just like that, wherever you are just taking the trades 5 minute zones, even if it is not fine tuned, and many of the zones are getting failed. Because of your inexperience, you are getting losses when you are going for aggressive trade setups. Finally, you are thinking aggressive trades are not working. We are not blaming ourselves. Because human mentality, we never blame ourselves. That is the biggest problem. You simply say the concept is not working. That's why recent time, a few weeks back, one of the HLQ analysis videos, I clearly mentioned. What is that I mentioned? If you want to go for an aggressive trade setup, at least take 2 price action clues until you get experience. We have 2 price action. It need not be same clues. It could be mix of different concepts. But within the same concept, we got 2 clues. This is the first time prices came near and prices moved. Second time, once again, prices came near to the zone and again sharply moved. Next time prices are entering, you can take a trade. Okay, that way this is aggressive. But here our interest is not in this aggressive trade setup. Our interest is in this fine-tuned zone. We have a failed ERC, maybe a dynamic view. It could be a rally, moved down and finally moving, rally candle, base candle and a rally candle. That way I have drawn this zone. And today we got the trade. Let me go to the 1 minute time frame so that you got clarity. When prices really entered into this zone. See, price entered into this zone at 10:29. When you booked the loss in the earlier trade, at 10 o'clock 6 minutes, you exited the trade. And you got the entry. Sometime prices were struggling. In this candle, see, prices sharply reached and went into our stop buffer area. This zone is not violated completely. See the stop buffer, how it protected our loss here. Otherwise, you would have exited in this distal line. This is the reason why we are using stop buffers. See, it is within the stop buffer area and then again sharply moved up and finally reached the target. When it reached the target, at 11 o'clock 6 minutes. You may say it didn't touch, maybe few paisa before you book the profit. Even if you feel it did not touch, again after some time prices came, finally it reached the zone. Whether you book your profit in this candle or in this candle after reaching the zone, it is up to you. But finally it is a successful trade. The 15 minutes target is reached. That means whatever the loss you got in Prestige, the same loss you would have recovered in the stock, still you would have got some profit, extra profit. KPIT technology, it is having 1:3 RR is there from our entry till this 15 minute zone. We have 1:3 RR is there, so no issues. As I told you earlier, minimum 1:3 is a successful trade. Or if it reached 15 minutes target, is also a successful trade, whether you get 1:3 RR or not. First of all, 1:3 RR is not there, you won't take the trade. Let us assume you took the trade, after that new supply zone is created. Because of the new supply zone creation, your target is changed and you are not getting 1:3 RR. Still we will book our profit at the newly created zone. Whatever the profit it gives, we will enjoy that profit. Those concepts also you learned in HLQ zone analysis videos. All these concepts I explained in the previous HLQ zone analysis videos. That's why important videos I am adding into the playlist. important strategies and analysis. We have a playlist. Everybody should listen those old videos. Without those listening those old videos, you won't improve your psychology. So if you are facing a problem, my recommendations to you is first complete our NeoStock supply demand zone course. I don't know, you might have learned outside somewhere. Forget about what you learned earlier. Go through the entire course. Second thing is, in important strategies and playlist, whatever the videos I added important, please go through all the videos. Maybe it may take some maybe a 15 days or 20 days time to go through all those videos and learn the concepts. Or parallelly, while doing trading, parallelly you can every day you can go through 1 or 2 videos. See, in this stock you would have got the profit. Whatever the loss that you got, you would have recovered when you got the trade here. 10 o'clock 29 minutes. That means by the time you already exited the trade, immediately you would have taken this trade, and probably at 11 o'clock 6 minutes, or if not at 11 o'clock 46 minutes, you would have booked the profit in this 15-minute zone. Suppose those who booked the profit in this candle, you may ask, now again second opportunity, can we take a trade here? Again third opportunity, can we take a trade? No, you cannot take these two because the zone is pierced. Maybe it happened after reaching again, it moved up. But once a zone is pierced, you can't take second trade in that zone during the intraday. If it is not pierced, you would have taken second trade also. You would have got again another profit. How much profit it gave? KPI Technologies. It has given 3,520 rupees profit. Of course, today this is given a very less intraday ROI, but okay, fine. Profit is a profit. How much loss you got here? 1,917. Let me say round figure, 2,000 rupees. Here 3,500 round figure. Still, after recovering the loss, still you would have got another 1,500 rupees profit. See, that is the power of risk management and trading discipline. The trade discipline is a very, very important concept. What is the trade discipline says? Follow the risk concepts strictly. Don't add any emotions. If you attach the emotions, that's it, you are gone. You will be missing the opportunities. See, today you would have missed this opportunity. Why? Because let me go to 5 minutes chart. Because in Prestige, when it is stopped out, here it is stopped out, but you didn't book the profit. You are hoping that it will recover. You didn't book the profit. You are waiting, prices further going, still you didn't book. Somewhere here prices are closing, and with fear you booked your profit here because you violated the fundamental rule, not booking the loss at this stopped out at your stop loss. You ignored the fundamentals. Now you booked more loss you got. Instead of getting 2,000 rupees loss, you got 4,000 rupees loss, or maybe 5,000 rupees loss, or maybe 6,000 rupees loss. Now you booked the profit and it badly hurt your capital. Why all these things happened? Because we are not disciplined. Trade discipline, we missed that concept. Strictly you have to follow the stop losses. If you follow the stop loss, your money would have been released, maybe a small amount only you lost from your capital, but your entire money has been released. Whatever the money is released, same capital again you will invest in buying some other stock. Say for example, in our case it is KPI Technologies, KPIT Technologies. See, today KPIT Technologies reached 15 minutes target, gave you the good profit. After that, the aggressive trade also it has given, but we won't take this trade. The reason, there are several reasons. It is at almost last closing hour of the market. This is the 15 minutes. Still from here to here you have 1:3 RR is there. But last 1 hour, generally what could be your target? The 5 minutes target. Here you have a drop base drop is there. Till this you won't get 1:3 RR. To get 1:3 RR, what you have to do? You have to reduce the risk. You need to take a deep entry. If you are planning a deep entry, price did not reach deep, again started moving. That way you will be missing the trade. Either way, you can't take this trade. That is the reason why I am not counting this trade. But what I am counting, maybe high liquidity zones, they are working. See, this fine-tuned zone worked very well. This aggressive trade setup worked, but even though it is not a practical trade. At least that way we get confidence on our concepts. What is the confidence you should get? Okay, if I would have booked my profit, I would have got opportunity in another stock. You may ask a question, maybe the other stock also will be violated. Rarely it happens. So far, last 15 months, 3 times only happened. All the stocks stopped out, or majority of the stocks are stopped out. Because earlier, couple of times, one stock is gave a profit, around 3 or 4 stocks are stopped out. Only the last Monday, not this Monday, the previous Monday, we have seen all our trades were stopped out. Around 4 trades, they are all stopped out. Rarely happened. See, last 15 months, first time it happened. All stocks are stopped out. Earlier 2 times, that is even before that, this first Monday of this month also happened, right? Out of 4 stocks, 3 are stopped out, one stock we gave profit. Earlier also once happened, maybe some 6-7 months back. Out of 4 trades, 3 are stopped out and 1 is successful. See, last 15 months, 3 times only it happened. If you are thinking that rare situation that day, and if you are missing the trades, remaining opportunities, it's not good, right? Every day if you are thinking, all my trades will stop out, all my trades will stop out. If every day if you are thinking, you never be doing any trading. That's why correct. Whatever you have to think in such a way, whatever the trade stopped out, I don't mind. I am a strong warrior while doing the trading. I never accept my defeat. Whatever the opportunities, I will keep on taking the opportunities. If anything stopped out, okay, I won't bother about this. If you, such a strong determination, if you are keeping in your mind, always you will be a successful trader, because we build a system that gives you best profits. Never disturb when your trade is stopped. It is part of the game. You have to accept it. Every month, for everybody who are trading in our by using our videos, I am sure at least 4 to 5 trades will be stopped out for them. But other side, at least 15-20 trades, they have successful trades. And you are focusing only on the failure trades and ignoring the successful trades. We never get success in stock market. It's all about mind game, stock market, and also risk management. And stock movements are influencing our mind. That's why I'm saying it is a mind game. Market will wants to dominate. Actually, market is playing with your mind. The moment you control your emotions, you will be a successful trader. So this is a very important point you have to observe. And there is one more trade, we successful trade today, that is Kalyan Jewelers. This is also a 75 minutes high liquidity zone. See, looks like zone is violated, right? But before that it gave 1:3 RR. It failed to achieve reaching 15 minutes target, but it gave 1:3 RR. 1:3 RR is a successful trade. This was the zone created, given by our software. This is a drop base rally with a huge wick. Previously also, this zone worked several times, but finally today it is violated. But before that, it gave a successful trade. How we fine tune? Here we have a drop base rally. This drop base 15 minute zone again fine tuned with 5 minutes time frame. See, here we have a failed ERC candle, maybe as a rally, base rally. And this 5-minute zone, we got the entry today. When we got the entry at 9:50 candle, 5 minutes candle. If you go to 1 minute, you get better clarity. See, we got 9:54 minutes candle, it reached, and finally it was moving. Maybe either you would have exited here, those who are exiting at 5 minutes candles, I mean 1:3 RR, or if not, probably in this candle. Here exactly it reached 1:3 RR. A little before you might have exited, those who book profits at 1:3 RR level. But those who are aiming for this 15 minutes target, still you will be keeping, the moment it reached 1:3 RR, you will be strictly started keeping your trailing stop loss. Trailing stop loss will be enabled the moment once it reaches 1:3 RR. So if you are using trailing stop loss, probably where you have a rally, you have two base candles and you have a rally candle, this is how you might have drawn a zone. And this zone is violated here, probably here you might have booked your profit. Still. See, after that prices were slowly coming down after this trailing stop loss is violated. But this is the profit you would have got. Those who booked at 1:3 RR level, maximum profit you would have got. But those who did not book, maybe some portion might be reduced from your actual profit of 1:3 RR. Because this is a minimum 1:3 is achieved, I have registered here. Kalyan Jewelries has given 5,425 rupees, which has given 4.3% ROI. Achieved 1:3 RR. But failed to reach 15 minutes target. And remaining stocks we didn't get opportunity. One stock zones are failed, that is L&T. L&T, yesterday we got the trade. We don't have any fresh zones, we know that. Let me quickly show you in the 5 minutes time frame. Yesterday we discussed, yesterday we got this trade L&T from this, see it is tested and came down. And it is a tested zone, today it is violated. And this zone is already tested previously itself. We discussed this, we can't take trade in this zone because it is already a tested zone. See, easily violated today. So that's why L&T we didn't plan any trades, it didn't happen. After that this entire zone is gone, and after that you can't plan any trades in this zone. Once it is a PR star violated, you can't plan any trades. And remaining stocks we didn't get any trade opportunities. Mainly I decided this video should be dedicated for the thinking about how people are having fear of booking the loss. At least I thought this video will be helpful to them. I will also add this video into our important strategies playlist. So this is about today's HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.